This conference will now be recorded.
Okay, Louie, I'm sharing the presentation format with you.
Thank you. And just to clarify, would the Q&A start after both presentation or immediately after each of the presentations?
I would say after your presentation, just so the information is fresh, we can address your Q&A and then after Grady's.
Great. Hello, everyone. Thanks for having me. Louie Nguyen. I started my investment career as an investment banker in Tokyo back in the mid-90s. And so when I started, the idea of impact investing wasn't even around. And so impact investing in general is a fairly new concept, a couple of decades old, and we'll get into that in a little bit. Mission-driven finance is based in San Diego. We are a certified B Corp, and most recently, Impact Alpha chose us as one of 50 emerging impact managers of 2020 for the work that we do. We raise private capital to deploy to for-profit as well as nonprofit enterprises that are doing good for the community that can't access capital elsewhere. We are generalists, so we don't have a specific focus or expertise in any one particular segment. We are good at structuring and financing. So think of us as sort of early day Goldman Sachs as it relates to deal structuring and raising and capital mobilization. So I have to show you very briefly our information and disclosures, which I'm sure all of you are very familiar with as it relates to being out there trying to raise capital. So this is information only, no solicitation. And so, as I noted, impact investing is a fairly new idea, and I think this is a really interesting quote where we're trying to use traditional capital to do more than what it used to do in the past. And for me personally, as it relates to my own journey in this, when I started investing in Vietnam for clients, the gap between the haves and the have-nots became very, very obvious. And the question that was in the back of my mind that became louder and louder as time went on was, what else can we be doing with our capital other than generating economic value? And so for many of us, this is sort of how we all arrived in this impact space. It's also a space that many others are moving towards. And so impact investing AUM is 502 billion, and that is massive growth from prior years. As more and more people are also starting to face this question, and given sort of the social unrest that we're having now, that question is even getting louder as people start reviewing their contribution to the world, whether it be social or environmental. And so we expect the AUM in the impact space to get even more to grow even more. So in total, impact investing is still a small part of the aggregate collective capital market, and you can see here 1 in 4 assets are in SRI, socially responsible investing, and that number we think should continue to have long secular growth profile as we look out into the future here. One of our active investors, this is the Carrie and Andy Ballisters are the individuals behind GoFundMe. Once they once they experienced that liquidity event, started really deploying their capital in a way that helps the community, thoughtful and engaged. And I think if you think about impact investing, individuals, these type, sort of pro demographics, young, educated, passionate, there's a good number of these type of investors. And so when we think about impact investing, we look at connecting. There's been a disruption. Our thinking. There's been a disruption. There used to be a time where you go to your source of capital, your community bank. They know you. You know them. And as the world grew, there was greater disconnect between that community source of capital. And so then it became very volume driven. And when it's volume driven, it becomes very, very algorithmic and box checking. And so many of the deals that should be done start falling through the cracks because they need it to be sort of standardized and be able to check boxes. Diversity is something that's very important to us. We have a management team that is 50% people of color, 50% women. And so we also look for that in our portfolio companies, because we think not only is it something that is meaningful for the business model, but also the resilience and then the ability of that management team to react, because in many of these businesses, it's not a matter of, you know, when are you going to have challenges. It's like how often and when. And so having that team be diversified is a real need. And so we step in to where we see there are capital gaps. We specialize in mobilizing capital. We often are not the only source of capital. And so, for example, a year ago, we did a transaction where we lent $400,000 to a nonprofit that works with at-risk youth to get them scholarship money through, interestingly enough, playing squash, because there are a lot of unclaimed scholarships on the East Coast and at big schools. Our $400,000 brought in another foundation to play for another $400,000, and our combined $800,000 triggered $12 million of tax incentivized capital to build the sports facility. And so essentially our 400 resulted in the breaking of grounds of this facility. And that's what we like to try to find, is in that, how do we mobilize our own capital and be able to leverage that up for projects that are meaningful for the community and for the world. And so many of you probably know this chart, this graph here, where you see the bootstrapping portion, and then micro and angel, and then there's this loss portion where, you know, before you can get to traditional banking financing, there is really quite a gap. And so we step into that space with our capital, anywhere between 100 to 500,000. And again, our capital isn't typically the only capital. We mobilize others. And so it's important to think about this as a capital stack that we aggregate, pull together. And that conversation of the capital stack, I think, is really interesting and important. And I'll loop back with that in a little bit, and as it relates to maybe some early stage financing needs. And so when we think about impact, we think about businesses where impact is core to their model. It's early childhood education, affordable housing, blue tech, green tech. Those are all very clear in terms of their impact to the community and to the world. We also dig into the job creation element of it, the positive externalities that come out of these business models. Because we deal in finite capital, every dollar that we deployed is one less dollar that we can't deploy somewhere else. And so we really have to understand, if we're stepping into this space, that we're really getting compensated not only for the financial risk, but also for the impact that we're trying to promote. And so just a snapshot of who we are. We have our Advanced 2025, which is our sort of house fund. Surrounding that are sets of capital that are very specific to an impact path. So with PCI, which is a local nonprofit here in San Diego, Project Concern International, we created Advance Her, which is a pool of capital specific to businesses run by women. Advanced API, Asian Pacific Islander, that is in collaboration with the Asian Business Association, where it's a pool of capital focused on those enterprises that are run by Asian Pacific Islanders. And then our most recent is Alliance Healthcare Foundation. They're a $70 million private foundation here in San Diego. We collaborate with them for a pool of capital that focuses on enterprises that has an impact on social determinants of health. And so in theory, if a opportunity comes in that is run by, that fits these pools, we can draw some capital from our Advanced 2025, some from Advanced Her, some from Advanced API, some from Advanced Health to do a transaction. And so these are the pool of capital that are available for us. We also have a home builder investment fund that's with the Habitat for Humanity here in town. We're creating a proof of concept where we raised $2 million for their ability to accelerate the building of homes, home ownership for underserved and underestimated population. Because up to now, they've only been using philanthropic dollars. Our set of capital accelerate what they can do. And if this proof of concept works, instead of 2 million, we could raise them 25, 30 million. The other proof of concept is the Freedom for Immigrants, which is coming into existence now. It is an immigration bond fund. Up to now, when a nonprofit or a group wants to post bail, they seek philanthropic dollars for that. We have come up with a concept where it's actually an investment fund where investors can get a return on capital, a small return on capital and a return up capital. And so that's being launched as we speak. And so from the standpoint of charitable investing options, there are donor advised funds, which very quickly, these are funds, a family experienced a liquidity event, they decide to park, $1 million, $5 million, whatever the dollar amount is, as in a donor advised fund. From a tax perspective, that's treated as a charitable event that year. And then when it sits in the donor advised fund, they don't have to necessarily deploy that yet. It can sit there and be invested in various other investment options before it goes out to a nonprofit that they donate to. So while it sits in that donor advised funds, it's tax exempt. It has the ability to invest in a variety of different options and opportunities. And so this is potentially a source of capital for early stage as well as sort of late stage but impact related transactions. Private foundations via PRIs and MRIs, they have the ability to take money from their corpus as well, not from their foundation, as well as from their investment, their impact bucket to make investments. And so our most recent deal that we helped structure was a nonprofit approach. A nonprofit that works in the healthcare space are looking for capital. Banks won't lend to them because they don't have a line of credit. And so we work with a private foundation to provide that guarantee for that line of credit for the banks to feel assured. So it's a three-party transaction that helps to trigger capital from the banks to the nonprofit. And so philanthropy, can do a number of things. de-risk, accelerate, and innovate. And so they are typically early in some of these proof of concept plays, and could serve as an important element of a capital stack. And so a capital stack, if you can think about it as a building, there's multiple floors, and let's say it's 3 floors. Your traditional investors, they're on the 3rd floor. If there's a flood that happens, the investors, the people who are on the 1st floor, takes that first hit, while those on the 3rd floor are feeling pretty secured. And so if there's even a larger flood, then those on the 2nd floor get hit, and then those on the 3rd feel, again, secured. And so to get investors on the 3rd floor, they would need typically at times to see that there are others that are, that are on the 1st and the 2nd floor. And those who are on the 1st and 2nd floor typically are those with an impact agenda, impact parameters around their use of capital. And so when you create a capital stack like that, you're de-risking for those who are your traditional investors, allowing them to step into spaces that they wouldn't be able to step. In sort of pure investment economic standpoint, on that traditional risk return, you're pushing that risk return profile curve out to the right, because now you're allowing them to have some de-risking element. And so, without, investors on the 1st and 2nd floor, some of these investors wouldn't play, but now knowing that it's been de-risked, they can take on more of these opportunities. And so really here, that's the image that I created or I talked about is really being brought out here, where different organizations have different names for it. We call ours reserves is at the bottom, and that's typically equity. And then you have catalytic, which are investors who don't mind a little bit of loss because it's their impact is more important to them, but they certainly would like to have capital, return of capital if it's possible. And then you have the core investors who, while impact is important, they're just in a position where the financial returns also is important for them. And so this is some of portfolio examples. This is the squash nonprofit that I talked about. And the point to drive home here is the creativity as it relates to being able to put a deal and a structure together that works within the risk parameters of the parties involved. This is Care Card. They provide non-emergency transportation support. They're a startup. We stepped into this transaction based on signed contracts that they have, and we did a lot of work around their ability to execute on the contract, but also the margins behind the contract to make sure that they can service our debt. And so when we work with early stage players and startups, it's a combination of what does the capital stack look like that we currently sit on, but also what is the path to repayment that we can see, and whether it be purchase orders, whether it be grants and donate grants that they have, that's not that there's a timing gap that we step into. And then if that doesn't work for debt, we also have sort of a consulting program where we think about how to structure a special purpose vehicle to be able to align the risk and return. And at this point, it's stepping away from debt and more towards perhaps a revenue sharing or maybe an equity play. But again, it has to be something that is aligned with how we see our impact vision. And that concludes my comments, and open for questions.
Louie, I just put one in the chat. There was one. Are you currently invested in any blue tech companies?
We are currently, no. We have been looking at a couple of, we've looked at a couple and we're still looking at doing work around it, but we do not have capital deployed currently with blue tech companies. Open to it though. There's nothing against that.
And then just to help you, there was a question, do you work with for-profit companies?
Yeah, do you want me just to go through the chat? I'll pull that up. Okay. Yes, so we deploy capital to both nonprofits as well as for-profit, and early stage as well as late stage, as long as we can be able to ascertain where the source of repayment is coming from. So we just did a loan today, low six figures, to a woman-owned startup where she's designed these stainless steel containers for cosmetic usage. She has a $600,000 purchase order, and we stepped in for financing the early part of that to help with the purchase order for her to finance that, and then we'll get paid out when that purchase order comes in. Our range of investment is from our own dedicated fund is anywhere between $100,000 to $500,000, and 3 to 5. We have the ability to go up to 5 years on these loans, but it's really based on what we see as the need of the entrepreneur and how we are most comfortable and where can we hang our hat as an investment case. And then we do have a dedicated fund. Our dedicated fund right now sits at about $5 million. We have a number of investment partners who ride along with us based on our due diligence. They have capital, but they don't have the due diligence, and so the capital that we have access to would then be a multiple of that, depending on what transaction that we see. We are focused on San Diego at the moment, or a San Diego connection. So, for example, the Care Car play that we looked at before, they are based in Irvine, but they had plans to be in San Diego within a year or two, and our capital allow that to happen. We are open to sort of San Diego agnostic, where there's no connection to San Diego, but if we feel like the impact there is significant, then we will look at it. But there's a finite amount of capital that we can do to that because we're really San Diego focused. We're open to what type of blue tech deals and water technologies. We're open to that as far as we can get our hands wrapped around what's the impact, how does it affect community of concerns, does it create jobs, and what is the path to repayment, what is the path to impact. Otherwise, we're fairly open. Formal process, and I'll just email you my email. You can also get to me on LinkedIn. And so there was a question earlier about equity versus debt. If we do due diligence the same way that banks do, which is looking at the past and looking at your balance sheet, historical balance sheet and income statement, we're going to end up at the same place they will. So we have to do things differently. And so we look at our underwriting through 3 separate lenses. and one is management. We really do a deep dig on the person, the character. Can we get validation that this person? Can we get, are they known in their community? Are they known as good people in their community? We do a deep dive on that, and that's particularly important. We do a deep dive on impact and how that affects and impacts the community of concerns that's important to us. And then we look at the financials. And so we really we approach it from almost a private equity perspective when we look at the totality of the business. We do an industry analysis, we do a Porter analysis to make sure that we understand where they sit in their space. And so once we've done that and we have an understanding and appreciation for that business, and we say, this is a business and an impact mission that's worth supporting, how do we express that support? And so that is a function of the capital source that we have. Thus far, most of our capital source is debt. And so we can express that via debt. And so debt, even though we're impact investing, we still have to obey the physics and law of the impact world. We can't be doing a debt investment, but incurring angel-like risk for our investors, right? And so there are some deals, there's some organization where we believe in what they do, but debt is just not a good thing for them, or it's not a good thing for our investors. And we're not venture debt. We don't step in with debt with an equity connection to it. So at that point, then we pivot to looking at alternative ways, and this is where the equity element comes in, where we say, do we see enough here where we can put a reasonable argument together for investors who we know and would be aligned with what they view as impact. I think there was a question here recently about how do we evaluate impact, and that's a question that is a very open question. And so if we feel like we have the ability to add value and contribute on the equity side, then we will have an engagement that we would approach the entrepreneur with, and typically the entrepreneur would engage us to be able to say, hey, can you help us figure out how to structure our transaction or structure this investment and be a part of mobilizing and helping us raise capital.
Thank you, Louie. I see there's one more question, but what I'll do so that Grady has enough time is send Louie's contact information as well as Grady to the entire group so that you can contact each of them.
Thanks for that. And just answer the last question. We are willing to be subordinate to other creditors, assuming that they're aligned with our impact course. If it's other forms of credit, fintech, or any other types of debt, we would seek the seniority position.
Thank you.
Yeah.
And okay, great. Well, we'll move on to Grady then. I'm just checking that he can share his screen.
I can. I'm good. I'll share it when I get to that spot. Everybody hear me all right?
Yes.
Awesome. Well, I appreciate the opportunity. I come from a different spot than Louie. I've very much been an operator all of my life. Somehow became an entrepreneur very early. Had a brief sojourn into the movie business and got out of that as fast as I could. But I've been, for the last 20 years, have been pretty much focused on mobilizing people to make the world a little better. And my company, Give to Get, we do this with mobilizing people in the private sector, both consumers and employees, to get out and get physical and do things in the names of their companies and their brands to make the world a bit better where they can. And then so I'll take a very macro view of all of this, and I understand kind of maybe where everybody is people trying to raise money and trying to figure out where they are. My goal is to show you that I think a lot of you guys are in the right current of where the world is headed, and I think there's a lot of opportunity in business and technology that does make the world better. I feel like the rising generations are demanding it. I think the portfolios are starting to represent it. And so back in 2014, 13, there was a group from the United Nations that came to a handful of us and said the Millennial Development Goals are coming to an end in 2015, and we've been working very hard about a new agenda to get to 2030. And there was a lot of desire to, for those that don't know, the Millennial Development Goals basically were created in the late 90s by 5 white guys in the basement of the United Nations. So there was and it was basically a list of things that the developing world needed to do, but the developed world was good. They didn't need any, they didn't need to work on anything. It was only poor people that had to really kind of get their act together and make the world better, which, looking back on that seems silly, but in the late 80s, that's probably how everybody thought. And so they made some very big progress during the 2000 to 2015, and some of the private sector got involved in that effort, but it was ad hoc. It certainly wasn't in any way an opportunity to really engage with the global development community. So much so that at some point in the 80s, Ted Turner gave $1 billion to the United Nations to create the UN Office for Partnerships, which allowed the UN to start to connect with private sector and try to get kind of this global development and global organizations to merge or at least connect with private enterprise because of the engine of private enterprise. And so that's the UN Office of Partnerships that in 2014 came to a handful of us and said that we're coming out with a new agenda. It's 17 different goals. We've worked very hard to figure out what everybody cares about. It's going to be the first set of goals that every country will sign up to. And it's actually the first unanimous vote that anything's ever gotten within the UN was the adoption of these sustainable development goals. So of every 182 different member countries. So it was very much in vogue, certainly in 2015 when it came to. So the Office of Partnerships said, look, we have a lot of mechanisms to get companies to give the UN money, and the UN's a very good convener, and CEOs come speak all the time, but we do not have any very good mechanism to engage people and people of the private sector, especially, into this agenda at all. Nobody knows about it. We're concerned that we're leaving the biggest assets on the table when it comes to making the world better. There is a sense that people got us into this mess, and it's going to take people to get us out of it. And so we spent a couple of years, a handful of us, trying to figure out where the white space was. There's a lot of people mobilizing people throughout the world, and we didn't want to do anything that was duplicative, or nobody needs another organization to do anything. So we found some white space in the universe, and created Impact 2030 as Shira said earlier, is the only private sector-led initiative to mobilize human capital to help achieve the Sustainable Development Goals. And we do have 60 companies on board. They represent 5 million employees, not 5,000. So 5 million employees from 220 countries and territories, and it's IBM and UPS and Google and the like. And in the beginning, there was a lot of education on the goals. So the first order of business of Impact 2030 was to get people to understand that the goals existed and that it could have been that was a tool for business. It wasn't just a marketing campaign. And so we were going door to door with this kind of effort to say, this is how you can differentiate yourselves. This is how you can communicate what you're doing and how you're doing it. And it took a while, but because especially as you get farther and farther away from New York City, California was very much of a late adopter, I think, on broad-based understanding or even acknowledgement of the goals. So I know that's changing, but it took a while to get the point across. And so we started to activate groups of people within the private sector and these big multinationals and even in small, medium-sized businesses to understand their company's position on this agenda and how they were going to participate. And the agenda, if you guys haven't, I don't know how deep you've gotten into it, but there are goals, there are targets, and there are indicators, and some of they've gotten very specific on how we know if we've achieved these goals. Some of them are less specific, but they're countrywide goals. They're not necessarily private sector goals. So, and more on that later. But they are ambitious, and who knows how we will go. But at least they are a marker in the sand. But when it comes down back to the private sector, so we wanted to accelerate and kind of activate people to understand their role in global development. And the second part was the collaboration piece. A lot of companies we had talked to from pharmaceuticals and tech and everything said, we know that we can get only so far. We want to find ways to collaborate with each other across industries and the like. And the goals provide a very interesting way to do that. And because you can start to attack a problem in a community from the intersectionality of these goals. And for instance, a great example was GSK, the big pharmaceutical company, connected up with SAP at some point, and they had a shared history of volunteering or sending people and resources to Rwanda and the Rwandan Health Ministry. And so they developed a program together where GSK would send pharmacologists and nurses and trainers to Kigali in Rwanda to train the health ministry to help train and rebuild the financial or the health industry there. And so they were there for 6 months doing programs and trainings all over the country. And then SAP had a 6-week program, and they deployed tech designers and database designers down there to design a whole new digital medical record system for the country that tied in with what GSK was doing. And then they left, handed it off to a local provider to continue the work. And then GSK finished their training for the next 4 or 5 weeks. And so when they left, they had a trained organization. They had a medical record system that was all up and running. And it was done because these two companies found a way to work together within their expertise. And GSK came at it from the health and wellness goal, and SAP came at it from a sustainable communities goal. So they were able to descend on one place, talk about what they were wanting to accomplish from different angles, but stitched it together in a way that really impacted that community and their people. And they did it all with their human capital and some of their knowledge and their sweat and their equities. They made that all happen. So that was the big second piece of Impact 2030, was trying to get people to work together, which is a very prickly business at times, but it was something that everybody really wanted to do. And the goals allow a certain amount of very quick communication around what you're trying to accomplish from a social impact standpoint. So you can start to find like minds who may see themselves differently than you see them. And certainly I've seen investment funds, and I've certainly seen investors invest in using these goals as a guide to where they're put their capital. And so it's being used in a lot of different ways, and I think it's very, very interesting bit. The third piece of the puzzle was measurement, and there's impact measurement and human capital measurement and a lot of different kinds of things coming up in the last 4 or 5 years about, you know, if I deploy my people into a community, how do I know what that impact is? How do I know if they're doing any good or not? And then further, once this you know, BlackRock's and the big private equity started getting into this impact space, there's all of a sudden a big demand for metrics. And there's a big demand to figure out how a company is deploying its human capital and how it is managing that, and how does that then become a factor in these ESG reports and ESG kind of investment portfolios. So there's a huge kind of movement happening out there, and there's social impact bonds. I mean, Louie's certainly got the layout better than I do, but the SDGs are becoming this tool about how do we piece this together. So I was just going to share very quickly about some of the measurement bits that's coming only as an indicator. I don't know how directly this helps you guys raise money or where you are. I'm not sure where everybody is in the stage of their business, but I only kind of roll this out as an indicator of trajectory of where a lot of people are starting to try to put data and figure out who's doing the right stuff and who's doing the real stuff, which I think sets people apart, especially those of us trying to start businesses and build businesses. Finding that differentiation is important. So just very quickly, I will share this screen. I think everybody can see that. Dump something in the chat if you can't. We'll look at kind of how we're dealing with impact measurement on kind of social capital and human capital efforts. And so when first on measurement, so how do we measure the impact of human capital on any of these goals, people's physical time and effort? It's a very tricky thing, and we did an extensive search for existing modes of measure. There really aren't any. They are purely anecdotal and guesswork. We did a lot of work on a theoretical framework. How do we kind of do this in theory? That proved very difficult as well. So we went straight practical. And so we developed with some grants from a handful of folks, piloted with a lot of big companies on different types of kind of volunteerism or employee engagements and human capital investments from a range of industry and a range of types of ways people got involved, right? So we're developing this public measurement guide for managers to figure out how they can invest their people so that they can invest them more. The objective of the whole thing is to improve the impact on the global goals by providing this practical framework that we're trying to get consistent units of measure so that things can be measured across industry and across efforts, all in an effort to grow the practice and grow the deployment of people in the community. The methodology was it's a contribution calculation. A lot of people use this in other areas, but basically, assessing the social impact of the program being supported, and then what portion of that can you claim by your efforts. And it's a very quick process, but a lot of the nonprofits, one of the bottlenecks of the whole thing is step one, is gathering program impacts and costs. It's hard when you're in kind of on the front lines trying to make something happen. You might not know all of the impacts and the cost. You might not know how to measure it, how to track it, or even do it very well. But that's where a big piece of this is going. How are we going to really figure out the outcomes, not just the outputs, but the true outcomes of it? And then you monetize the input of the people, you calculate your claim, and then you align it to an SDG category so that you can kind of align it with the rest of your investments and tell a company's whole story, right? So it's not just where you put your money, it's where you put your people. And how do you claim that impact? How do you derive the value of that impact? And there are other tools being built around valuation. I'd go take a company we work with called Pro Social Valuation, where they really try to value these social impact innovations and social capital. They look at community capital, civic capital, social capital, and put a dollar figure on it. And it has allowed a lot of nonprofits and companies to really value themselves in a very interesting way for them to raise more money and capital. So these 4 steps, this is very new. It's being rolled out. It will be open source, but it's a way to see how we're measuring kind of impact and what that really starts to look like. And the second bit, I'm going pretty quickly here, so we'll have questions, and where am I going? There's nowhere to go. So I'm around for questions at any time. because I know we're coming up on it. The next idea was metrics, and how do we get the investment community to understand the value of human capital? How do we know if a company is measuring its human capital investments very well? So we convened a big group of people from NASDAQ and PIMCO and TCS, Arizona State, KPMG, Deloitte, Pfizer, and a few others to look at 1,200 metrics and standards from dozens of frameworks and institutions, and tried to claw those down into something that's internationally kind of recognized and practical, so that when kind of investors are looking at the social aspects of ESG, human capital needs to be in there. And so we are developing these metrics. We got 1,200 down to 10, and I'll give you kind of show you how they're grouped, just so you can start to see how these different types of things are being measured. So the first three of these groups, we looked at kind of the basics, how you're deploying your financial and non-financial capital into communities. And if you are connecting management review and compensation to these investment targets, it borrows from some existing metrics in the marketplace, but it's basically how much are you putting out there and how much are you holding your people accountable. And then it moves into compliance and risk. Are you tracking the negative side of this? You can't just be touting all of your good and not saying I don't even know the negative stuff I am leaving out there for others to clean up. And then the third bit is how much are you investing in your people? It's one thing to invest your people into community. It's the other thing to talk about how I'm investing in my people, the training. How are we having, at the end of the day, we kind of our people spill out back into their communities. Are they better? Are they stronger? Are they needing, government assistance to get by and to learn things? And then finally getting into innovation. How much future focused are you looking? How much investments are you making in enduring resilience and strength? And I think these do kind of get very specific and granular, and we will be kind of rolling these out. The coronavirus kind of slowed a lot of this down, but it will be coming out in the fall as we run some data through this and we start to see how valuations of companies tie to how they treat their people. And it could be a very interesting kind of way to go. So that is very quickly, the measurement side of Impact 2030, and as we grow this whole kind of effort, we are going to kind of see how this global development work, and that you guys are tied to. I was saying earlier, I love blue tech. I love I hadn't heard the word before, and I think there is a lot of money in it. I think there is a lot of interest in it, and I think that organizing around these global themes of these goals is just a way to indicate, what's happening and what's possible. So I'm open for questions. I know we've got about 5 minutes left, but I appreciate the opportunity to talk about Impact 2030. I think human capital is an undervalued resource. And as from one operator to another, I really appreciate everybody kind of doing their thing here. I'm just really inspired by what's possible. So I appreciate the opportunity. Ooh, okay, chat, sorry. The main thing a startup company can do to support these efforts, given the nature of a startup. I think the first thing any company ever does is is just alignment to the goals. So I have found that people make a lot of assumptions about where you think you where your alignment is. And, oceans is one of the goals, but there are other, there's life on land. There's a lot of ways that that a lot of new technologies can affect the SDGs. And I think there's, I think underneath all of these goals, and you look at the indicators and the targets underneath them, there is, I think 60 or 70% of overlap in the targets and indicators. So sustainable communities, very much about life on land. And so if you look at not just the icons, but you get underneath about the targets and you see how those icons are being defined, you can kind of find yourself, you can find yourself aligning with many more and open yourself up to a broader conversation of finding support for the company. And I think that showing how you align, especially in the impact world, showing how you align yourself to the SDGs is certainly something that I would put out front, because I think showing you're part of that global community is helpful. And I would align them in your business plan and how you go to raise capital, because it will also indicate where you can go for second stage. It's where you go for partnerships. It's where you find demand as well. So I think there's a lot going on there. Michael Jones, combating the illegal, unregulated, and unreported fishing is an enormous problem that needs to be solved. How can you support a group of TMA member SMEs that need funding to want to come together to win a solution? I could talk more with that. I think there could be a conversation perhaps with some resources at the United Nations about how this ladders up to a global issue. The UN sees that problem too, and there could be ways to find ways to engage around that. And I'm happy to explore it and see if that's possible, if there's a big enough group out here who would like to connect with somebody over there. Decade of the Ocean, yes. How is this Decade of the Ocean connected to? Well, how is the question? I assume you can read it. Impact 2030 is private sector led. So what we are trying to do is get companies to figure out what they care about and then find ways to connect them to others that care about with them. So I think there are some of our member companies who are already members and some that are coming that have oceans as a big piece of their work. So we're kind of cause agnostic in the and kind of picking winners of which goals to focus on when. We're really focused on action and mobilizing people to do it. So it's a part of the work. It's connected because it's part of the goals. And we do convene at the UN often with the private sector around a variety of different issues, and the oceans is definitely one of them. Two minutes left. Feel free to send Louie a question too, as we sit. Some companies have started adapting their services to PPE and other restrictions. Yes. Well, I mean, the coronavirus bit kind of unwinds, kind of slows down a lot of things. I think that, but I think it's more of an accelerator than anything else. I think people have had to take a step back, but I think the need and the desire to connect a lot of these initiatives is, to me, becoming ever more apparent. I think there's a certain humility that is emerging in the global development space where, 15 years ago, everybody thought they had the magic bullet to solve everything. And now I believe they know that they can solve a piece of these puzzles, but they've got to be interconnected with each other. And it's the interconnections that are going to accelerate all of this. So, just as our response to the COVID-19 business has had to be interrelated for it to be successful, and what I do is directly impacted about how you feel potentially. I think that kind of acknowledgement of the connection points are going to grow.
I'll just also agree with you. Just post in the chat. Thank you both for the information, and I think this has been a really beneficial webinar. And of course, it's also recorded, so we'll be putting it up on the YouTube channel for TMA and sending it out to the group if you want to share it or just review some of the information, as well as sending the contact information for both Grady and Louie to the group in case anyone has any further questions, follow up, or just wants to get in touch. So thank you again, and we look forward to seeing everyone at the next TMA event. And thank you again to Louie and Grady for your time.
Thank you all.
Bye, everybody.
Hi, thank you.